Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so we've just come into the closing match for our market today. We've closed slightly lower than the open, and really not much to report there. The market pulled back throughout the day despite positive futures this morning, and technically we can see here things are looking a little bit more bearish again. Coming, indicators looking a bit overbought. Come off some resistance. We've traded another lower peak. Got a lower trough down here as well. So it's looking more and more likely that we're going to come back off and test either 65.30 here or back down near 64. 64 is the lowest level we've traded to this year. So when you take a sort of broader look at what's been happening, we had that huge run after COVID. We're now into a bit of a downtrending market, and now we're into sort of a megaphone pattern here. Look, guys, I wouldn't be surprised if we don't set another lower low this time around. So, what I'm saying here is I wouldn't be surprised to see 64 break in the coming sessions, maybe in coming weeks. Now, it's actually the US markets that are making me a little bit more bearish. You can see they tried to rally throughout last week, but it's failed and come back down. Puts us on a bit of a knife's edge here, trading back near the lowest levels we've traded this year. If that level's now taken out, then we're going back and probably got targets back down near 32 somewhere. Right, so I wouldn't be surprised once again for something like that to actually play out the way things are going out there. Might take a while to get us down as far as 32. 34 is your next sort of port of call if this level breaks here. The way the futures are looking at the moment, guys, you got the futures market sort of right on testing that level. Okay, so where the futures are sitting right now is right on this support. So tonight's the night, guys. Are we going to break through that, or are we going to hold once again? That's your big question technically. But yeah, it's just interesting to see how it's come up and created that lower peak again. Forget the lower trough, guys. We're reconfirming a downtrend. And yeah, so things could get a little bit nasty here. Now, one of the other reasons why I'm talking a little bit more bearish, guys, is looking at the bond market. So what we saw this morning is US bond markets reopen after a public holiday yesterday. It was interesting. The bond market's closed, but equity markets open. That doesn't really happen all that often. But yeah, bond markets were closed for the night session, reopened this morning, and we saw the US 10-year yield jump very quickly up to 3.98%, so just below the 4% mark. Highest it's traded to this year, highest it's traded to for a very long time, in fact. Now, every time this year that bond yields spike higher, equity markets drop. Okay, so it's rare when it happens in our session, which is rare to happen. Usually we don't react much to it. It's almost like the Aussie equity traders aren't looking at this, but the US market equity traders do. And what we find, and what we'll probably find tonight, is US markets will come off a bit. If they break that support level, well, there's some pretty big signals there, guys. All right, things are getting a little bit scary. Now, the next big test for this space and what's been moving this space around a lot has been economic data. And we got CPI reading out Thursday night. So if the CPI reading from the US comes out higher than expected, then you're going to see another jump in bond yields, and you're going to see the markets crack and fall even further. So there's a lot of big risks for the market really coming up. Now, in addition to that, this morning and overnight, we saw some action in the UK bond markets that was a little bit worrisome as well. We saw the UK yields jump up above 5%. What one would believe it was a bit of the UK central bank QE kicking in, which pulled the yields back below 4. But then they spiked back above 4 again. So that was a bit of a signal that the central bank QE may not be working in the UK. So that's another thing to worry about here, guys. So the bond market's definitely sending some bearish signals out there for us, and we suspect that we'll see some bearish movement over the next couple of sessions. And whether that accelerates or not, it's really going to come down to that CPI reading Thursday night. Look, the other thing to make note is crude's back over $90 a barrel. That's also inflationary. If we see, the likes of energy commodities continue to rise, crude oil in particular has come up on the back of OPEC last week, cutting production. Okay, so the Saudis, they're not backing the US guys. They're dropping production. There's a clear sign out there, guys. There's a clear signal here. There's a divide starting to happen between the East and the West. And, the East is not having a bar of it, guys. If demand's going to drop, which is what the central banks are trying to do, is drop demand, while they're going to also drop production and keep prices elevated. That's not good for what the central banks of the world are trying to achieve. Okay, so that's also for me another sort of issue for the markets. Okay, I'm struggling to see the light at the end of the tunnel at the moment, right? So this is just adding to that pressure. Then you've also got the tensions between Russia and Ukraine, the east and the west is what it's turning out to be, because you've also got issues with US and China, with the US changing rules around semiconductors and supplying and buying semiconductors and supplying to the China. So look, there's just too much. There's a lot of tensions in the air. Okay, between Ukraine trying to get into NATO, threats from Russia. It's just really sort of the negativity is really sort of playing out at the moment, guys. Right? Bond markets are reacting accordingly, and I suspect that equity markets are also going to do that. So markets are on a knife's edge, right? To me, the biggest things that are going to be the CPI reading Thursday. If that comes in high, okay, like it did last time, if core comes in high, I think markets with everything else that's going on are going to break lower, okay? So for me at the moment, it's a bit more of a sit on the sidelines or go short, okay? I'm doing a bit of both personally. Okay, got most of my portfolio in cash, sitting and waiting to see what happens this week. Also playing a few really well-positioned shorts across a few areas of the market. So, look, guys, it's yeah, the warning signs are there. Okay, so if you're generally an investor, you should be looking to hedge. Depending on your strategy, I'm not here to give advice. This is general advice only. Short term, over the next week, things are looking a bit bearish, but could change dramatically depending on this US CPI reading Thursday night. That's the knife edge part, guys, right? That's the part where markets could jump up if, luck's on our side and all of a sudden inflation wants to come off. That's not my personal view, but it could happen. We are just speculating at this stage on what that CPI rating looks like. And look, for me, with the strong job numbers last week, I can't see inflation coming off yet, right? Economic data is still a bit strong in certain areas of the US. That's causing this inflation. Inflation's got its own legs now. It's not just moving up because of tensions in Russia, Ukraine. It's not just moving up because commodity prices have come up. Inflation is now moving up because businesses are increasing their prices, having to increase wages, having to compete in the wage market in the US. This is more US than us. So I can't see US inflation come down, right? Not in the short term, guys. This is going to take a while. And if the Fed wants to continue to go on this path and battle inflation by increasing interest rates by 75 points a go, equity markets aren't going to like it, right? So we need to see a Fed pivot. We need to see inflation down lower, and it'll be nice to start seeing some tensions ease out there. But right now, I'm just seeing more and more tensions, more and more issues for markets, and a very high likelihood of markets breaking lower. Okay. So the warning's there, the risks are there. Let's see how the week plays out. CPI is really going to drive what happens next, I feel, and that's coming up Thursday night. Only thing I haven't mentioned is US reporting also kicks off Thursday night, just to complicate things a little bit more. Let's see how earnings are going. Let's see how these companies are withstanding this higher interest rate environment and withstanding this higher prices of goods and labour, right? So Yeah, that's all I've really got to say at this point, guys. Sorry, I don't have any better news for you. Things are looking a little bit grim out there for markets at the moment, so let's just play them accordingly. All right, take care. Thanks, and bye for now.